If you remember, in this example, I used ES trigger point support to be my profit target for NQ, because the trigger points can also be useful for spotting profit targets, and the correlated trigger points can be also useful when there's a large distance between the trigger points in the current instrument you trade. But let's take a look carefully here when ES bounced off its trigger point support level. Can you guys see a double bottom here? Double bottoms are often used for spotting intraday support levels. They can be very useful for spotting profit targets, especially when there's a large distance between the trigger points in the current instrument you trade. But let's take a look carefully here in the left side. This acted as a resistance before. Interestingly, aligned with the trigger point resistance of ES. Then NQ broke together with ES, and this intraday resistance level turned into an intraday support for NQ, aligned with a trigger point. So double bottoms can be used for spotting intraday support, and double tops can be used for spotting intraday resistance. But you need to be careful, as the market always creates double tops and double bottoms. However, when they are aligned with a trigger point of a correlated asset, it's like a hidden significant line created by the market or exposed by the market in real time, and there's a high chance of a strong reaction. So this is an intraday support validated before, acted as resistance, and this is a trigger point support, and these two levels are the equivalent levels we're looking for spotting profit targets. So to summarize, intraday support and resistance can also be used for spotting profit targets, especially when they are aligned with a correlated instrument's trigger point. Speaking about spotting equivalent lines, NQ's intraday support is equivalent to ES trigger point support. Now let's summarize. Spotting equivalent lines on 2 or 3 correlated assets is key in the CTP methodology. Intraday support and resistance can be identified by double bottom or top created by the market, especially when aligned with the trigger points. The trigger points can be useful for spotting potential profit targets, and when there's a large distance between the trigger points of the current asset you trade, the correlated assets trigger point, referred to correlated trigger points, can be used for spotting profit targets. Spotting equivalent lines can be done between intraday key levels validated before and the trigger points of the correlated instrument.